Hi everybody, this is Meherban Faroogh from the 1000 Pip Club. Today is November 23rd, 2011. So this is our sixth class, if memory serves me right. So far we've done 5 classes and we've gone through a bunch of stuff at a high level, fundamentals, technicals, interest rates, carry trades, and all the way down to our immediately previous class, the 5th class, where I showed you on November 16th how to write up a currency trade plan. If I haven't said this enough, I'll say it again. Especially if you're new, you're a beginner to and kind of an intermediate trader, and you're having some difficulty either understanding Forex or trading Forex or tying the pieces together, my recommendation to you is to step back, not worry about making money immediately. I think we should worry about learning how to do this right. The classes that we offer, we've been doing this for the last 4 or 5 years on other places. We call it the basic currency trade plan. I taught you last Wednesday, November 16th, how to write up a trade plan, how to analyze charts, which I'll do today as well, and then and we gave you a basic trade plan template, which should look something like this. It's on the website. And what I'm doing is I'm pulling up a few things together, so hopefully you can see the website. Forexstreet.net. Forexstreet.net. If you go under groups, and you'll come across 1000 Pip Club live currency classes. You go, and I see that a few members have joined. Thank you very much. If you want to participate, which I suggest you do, the best way to participate is, okay, I need to condense my chart a little bit so I can see can you guys see the website? Yes. The forum. You need to go in this forum, go on trade plans, model scanner to create that space for me. Pick up the trade plan from here. I won't click it right now. And submit, fill it out, and submit in class. What I will do is I'll open up your trade plan, whichever pair you picked up, and I'll analyze it with you. I'll guide you to the best I can as to where you missed out certain price points, or if you're not looking at things, in the most ideal way, whatnot, technicals, fundamentals, all that stuff. So, what I've learned from experience is those students who participate actively, they make the most of it. Okay. That being said, I do appreciate when you're new, relatively new. It's a little bit difficult. It can even be a little bit overwhelming to get all this right. So, with that, let me get started. So, you must have heard, is AXU Aussie considered a currency and we can apply strategies in Forex? Now, XAU is that gold? I think. Is that gold or is that silver or whatnot? I don't trade that one. Sure you can. Anything with a price chart. Thanks, Sebo. Anything with a price chart, gold and all. Yep. Anything with a price chart, I don't care what it is, you can trade. As long as you understand, and that's the beauty of the scores, guys. You can apply the same concepts on stocks. As long as you understand how to read price charts, as long as you understand support, resistance, fibs, and you start getting a good sense of fundamentals around it, sure, you can. I don't trade that, and that's not what I'll be picking up in this class. So just so you know. Okay, this is the Think or Swim little featured. I'm sorry, I have not had a chance as yet. We've taught this back in our paid membership class on the weekly sessions. I need to just work with my website administrator and pick up the relevant segments and put it on our free site. But once you get that up, and there's a bunch of formulas you can just copy paste and it'll pop this up for you. Once you do that, it's a nice little feature. It just, remember the rubber band effect I showed you? Where what this does is, it shows you, at a glance, the first few days, are days, TDs, today's move in pips, D15. Guys, you can see this, right? Can you see the Think or Swim? Just give me a quick yes. I know I'm not talking to myself. I just need to get used to HotCom a little bit more till become an expert. D15 is the average move of 15 days, thanks to me. And the next few where it says W, that's all the weeks. Where it says N, that's all the months. So D15. So what you can do quickly is kind of click on this T difference. What that does, it takes the average range of a pair and calculates the difference between that and how much it's moved since the last close. So since today, and this is based on Eastern Standard Time, so based on Dow close, whatnot. So in this case, you can see Aussie CAD stands out. I would not take a trade just based on this. It's a little heads up for me. I need to have done all my analysis, over the weekend, weekdays, whatnot. It just gives me a heads up when I get up 6 in the morning or whatnot to try and take a trade. That, hey, by the way, this pair has moved significantly. So Aussie CAD overnight has moved about 98 pips. Its average range for the last 15 days has been 90 pips, 91 pips. It's kind of overextended itself. Now, the reason it's kind of nice is I can go across on the week and say, hey, on the weekly basis, this moves 206 pips. So far in the week, this is Wednesday, the week is not done yet. It has moved 148 pips roughly. And again, this is rough benchmarks. Don't swear by it. About 58 pips is left. But here's the thing that caught my attention. The day caught my attention, and what also caught my attention was the month. So same concept, average of 15 months is about 459 or 460 pips. For the month, it's moved about 458 of those. Just about 1 or 2 pips is left on the month. So what that tells me is that though on the week a few pips are, think again, the rubber band effect. The rubber band for the day and the month is stretched out. Now, so automatically your mind should say, let's think. Aussie CAD. So what's the parallel inverse? Now before I do that, what's the best parallel inverse for Aussie CAD? And to me, you cannot answer, by the way. So I'm trying to see how many people are paying attention. If you were to look at Aussie CAD, guys, and you need to participate in class, I think that will help you out. If you're looking at Aussie CAD to take, which are the two best parallel or inverse pairs to look at when you're looking at Aussie CAD? Which are the two best parallel inverse pairs to consider along with Aussie CAD in terms of charts, in terms of their support resistance, in terms of their Fibonacci's, where they are, before you try and get into Aussie CAD? Which are the two pairs, guys? You got to be quick. I don't have too much time. Okay, Aussie CAD, and this could be a delay on the Hotcom room. Okay, they may can answer that question. Abel. Aussie CAD, folks, try and focus on the class. You can ask basic questions at the end. Anybody? Okay. For Aussie CAD, the two pairs you should consider is Aussie USD, okay, and USD CAD. Think about this. Aussie USD, Aussie, because Aussie's left the Aussie USD and Aussie is left to the Aussie CAD. And USD CAD because there's a CAD element in both USD CAD and Aussie CAD. And why Aussie USD and USD CAD and why not Aussie Yen or Euro Aussie? Well, we can look at that too. But because these two are majors, US majors, anything that has a US dollar attached to it is what we call for as major pair. That's where the liquidity lies. That's why you need to look into it. Okay? Okay, let me get down to it now. So what I'll do is, so once again, I would never get into a trade just based on, hey, the average daily range is stretched out. That's the worst thing you can do because it can just keep going down. What I need to know is which direction is this going in, and I may not be comfortable taking the bounce in that direction. For instance, you should know by now, if you don't, when you refer to risk currencies, your euro, under the current environment, the euro, the Aussie, the Kiwi, even the pound, but not so much. Euro, Aussie, and Kiwi are considered risk currencies, okay? So if the Aussie CAD is going short in this direction, I would be quite hesitant to take it long at this point in time, given the current fundamentals that's going around the Eurozone, okay? Because when things are scary, as they are, in especially the Euro world, and pretty much almost around the globe with the super committee, everything else, you need to, maybe I'll put this, I'll be hiding my chat feature. I hope you can just respond to all these because it's frustrating for me to focus on two things. Right, so let's go on the charts now. So Linda, I hope you can capture all this. Okay, so let me now focus on the charts and put this on the side. Okay, what I'll do is, since I have enough time and nobody submitted the plans, rather than going over my charts that is all drawn out, I'll open up a new chart and try and walk you from there. So that'll give you a much better understanding of how to analyze charts, how to draw your support resistance lines, how to draw your fib lines. Folks, I'm talking from experience. Initially, when I started out, I was a little bit confused. Okay, so if you follow along and if you do this on your own, you will find that knowing how to use your tool, which is your charts, would be of tremendous value. Okay, other than that, you can be spending hours and spinning your wheels, having no clue how to trade forex. Okay, so once again, this is FXCM. If you haven't downloaded this, go on fxcm.com and download MarketScope 2.0, Trading Station MarketScope 2.0. The way you'd open up a new chart is you would go on. In fact, let me just cancel all this out so it's not confusing for you guys, and I'll start from fresh. So what I'll do is, since I picked up this pair, I'll start analyzing Aussie CAD first. Then I'll go over Aussie US, and finally US CAD. Now, if you guys lose me, Demi, I've got my cell phone with me. For any reason my screen freezes up or just can't hear you, just give me a call, Demi, and Demi will respond to questions on the side chat. And if for any reason you can't see my screen refreshed or whatnot, then Adinda or Maud or any one of the admins can always privately send me a message. It'll come a little beep and I'll get away. So that's where I don't have to focus on questions right now. Okay, so what you do is you go on file and you say create market scope. You can select your relevant pair, or you can just go Euro USD. I don't care. Just pick up any pair, resize it a little bit. Now this little feature here, auto scale chart vertically. You see how it's all kind of a little weird. When you click on this, it auto sizes the charts for you. You see the little grid lines behind. You can leave them on if you like to see them. I don't want to see them. That's my personal preference. I shut them off. I like to see a little clean white background. Now there's all kinds of things you can do. You can change the colors and bars and whatnot. I won't do all that right now. Since I'm looking for Aussie CAD, the first thing I'll do is I'll pick up the Aussie CAD. And somebody asked a question, can you trade XAU USD? Right there is XAU USD. That's the gold versus US. I don't look into this, but sure you can. Okay, Aussie CAD. Where are you? Okay, come on. Aussie CAD. There's so many that. Okay, there it is. Okay, right. So first of all, make sure you're looking at the most current candle. You start always from the month, folks. Okay, that's what I do. So the first thing I'm trying to do here is I'm trying to make some sense out of this. Okay, so you'll hear me almost talk to myself. I promise you, I'm not crazy. But I'll try and talk it out. So you can almost, as participants in this class, you can almost try and figure out how I'm thinking. And based on that, you can, hopefully try and repeat that process or improve that process for yourselves. So the first thing I do is I look at the monthly chart and make sure I can see my entire universe. In this case, I can see charts going back up to May 93. Okay, that's fair enough. That's far better than, of course, looking at a 5-minute or 60-minute chart. Couple of things stand out to me. There's a low there, high there. So first, what I'll start doing quickly, start drawing some support resistance lines. Then I'll start looking at the current time frames and draw some support resistance lines there. And I will draw some fibs and see where everything stands out. Okay, so in fact, what I can do is start with the fibs only because the fibs start and end itself are decent support resistance lines. So what I do typically is quickly go and draw like from their low to the stop, and this may not be precise. I'll come back and make it precise later. If it's going long, I prefer to keep it green. It's like a little visual that helps me. If I'm looking at a monthly chart and something as significant as this, almost the all-time low to the current high, I would make it a far thicker line. So thick means it's a longer time frame, and short and thin means is relatively shorter time frame, like a day or so, or a 60-minute chart. Okay, so right there is my first point of contact. The immediate thing that hits me as whoa. Now this is the 23.6%, 98, 30, 38 is pretty much this resistance line here, and here. So that's kind of nice to know. And on a monthly basis, I know it's far away, in terms of parity, but if it would come down here, and if I would take it long from there, that'd be awesome. Especially since the trend since October 2008 is bullish. So I'd like to see a little bit deeper retracement. If this pair was to come down short right now, I'm telling you, let's look at this, 98.36, 98.42. Okay, that number I want to capture right away, 98.42. 98.42, and that line I want to keep also a little thick, so it stands out as a thick and a solid support resistance. Another one I want to pick up, of course, is this one, 98.14, which is a little higher than this, 99.14, and that also is a nice number, 99.14. My personal preference, of course, I'll try and take it if I can. Now, here's the other point. This is also very huge. And I'll change this color to a little blue so I can differentiate between the two. Okay, guys, I hope you're picking this up well. So you see this high, 99.14. Now look at this. This is a monthly chart. I'd remind you, this is a monthly chart, not a 16-minute chart. The current lows, see how far they came. 99.14, right there, 99.139. So just round it off to four decimals, and you'll see the number is 99.14. Okay, 99.14 on this candle low, August 2011, and 99.14 to the pip almost, November 2009. Current price is 1,152. Do you guys know why we call ourselves 1,000 pip club? This is it. This is why we call ourselves 1,000 pip club. Because I'm looking now again. The current price is 1.0159, right? For it to come down to 99.14 is what, about 200 pips or so, roughly. My math may be off. But if it does, and when it does, I'll be waiting. Now, just because it comes down on that number and hits there, I may not necessarily take the trade right then, back up along. A lot depends what's going on in the market at that given point in time. What if right just 2 hours before a rate announcement comes on Aussie, right, where they've decreased the rates? If they decrease the rates, it would most likely break 99.14 and drop to 98.42. Now, even on the euro, if they decrease the rates on the euro, or the new guy Mario Draghi, he makes a statement, the ECB chairman. If he makes a statement that is either not conducive to growth or points towards rising inflation, not rising inflation. If it's rising inflation, that means they'll increase the rates. That's kind of good for the euro, which means the euro would go up and the Aussie would kind of pick up after that. But anything to do with the interest rates coming down, any indications towards that, whether it's Aussie or the euro, because kind of Aussie, follows the euro kind of closely. They're both risk currencies. Or any negative sentiment or statement coming out from any other politicians or central bankers out of Europe, especially Europe, or Fed would take this short. You know what would take this long? The kind of stuff that would take this long, God willing, if it's around here, is let's say US was to come up with QE3. If US comes up with a $1 trillion QE3, just from the time when it's heading down here, that sends a positive sentiment out in the market. Now, a lot depends also how much negative sentiment is already there. But if they did a $1 trillion or $800 billion QE3, I would imagine that at least for next week or two, there'll be positive sentiment. When there's positive sentiment, it's a risk on mode. When it's a risk on mode, risk currencies like Aussie, which is on the left of Aussie CAD, Aussie would go long, Euro would go long, Kiwi would go long. So if Aussie was to go long, your Aussie CAD would typically go long as well. Now again, what you're looking for is that initial thrust, initial momentum. Lock in your trade. Remember last time I mentioned about getting in with 3 lots now. It could be 3 lots, it could be 30 lots, it could be 300 lots, whatever you want. And we just suggest you can do 1/3, 1/3, 1/3. You can do 1/4, 1/4, so on and so forth. You can do 50%. But there has to be some sense of trade management there. You can't leave everything on the table. If the trade goes in your favor 25, 30, 40, 50, 60, 100 pips, you just can't leave everything there because more times than not, it'll come and take you out. Okay? It doesn't always go in one direction, 100 pips. It just does not do that. But there are times where within half an hour, it will just go, quite a bit. The point here is, we don't teach scalping. We don't encourage scalping, but the first to make your trade safe quickly. If it goes in your favor 25 pips, 25, 30, 40 pips, it's recommended that you take off 10% or 30% or 50%, whatever you want, of your trade and lock it safe. So you kind of banked a few pips and you want to ride the remaining 75% of your lots as much as you can. So the ride in this case, just from the monthly chart, if I can show you, if it comes down to 99.14 right there and starts taking off long, your ride can be as high as 0.0663. 663 and above. Look at the momentum, right? I don't think it's happening anytime in the near future, to be honest with you, just because of the bad news that's out there in Europe and even in the US and so forth. I know I said a lot of things, guys, and some of this maybe a little bit of rambling, but if you go back and listen to the archives, that's how I've learned from those who coached me. If you go back and listen to the archives and try and break down what I'm saying and think through and read the news and see the charts, it will start tying up together. Okay, let's move on. So the other thing I would do is, okay, I see a resistance here, 546, but in context of my current, now, the only reason I would put that up, 546, is because if I manage to get into a trade, one of my targets would be that price point right there. Well, that's too much, actually. You went to, what is that? 546. Okay, 546. 546. I'll leave that line there. It should probably be a thick, bold one. But if I get down here, one of my price points where I'd like to take my lots off before it gets all the way to the top is 546, right? One of the other ones I'll be looking at, again, I'm still on the monthly, is this high. See how it goes up, comes down, goes up, comes down? So as it's doing the staircase climb, this high here is 2019. That could be one of my other target price points. 2019, I think it was, right? So once again, when it comes back down here, 2019 could be another target point that I'll take some lots off. Okay, let's go into some of the other fibs I would like to draw. Is this low here? I like this one. Now before I don't make sure my price points are correct. So the high is 6637. See, it's not. This is what you have to do. You have to draw your fib and make it precise. So click on the bar, look at the high, 6637, look at the high, not the close, low, or open in this case. 6637, 6637, and do OK. This has changed. What's the low here? 7158. Okay, I'm again off here, right? Because I did it just visually. 7158, right? You can go for decimal, that's fine. Don't worry about the fifth fractional. I do it at times I don't. So anyways, the beautiful thing, folks, here is 23%, 23.6% ties almost perfectly with these two peaks here. You see that peak? 98.35, 98.50, 98.55. So 55 is the highest price point here. 55, and down here it was 36, 42, 42. This is amazing. So 23.6% is 98.36. 98.36 to 98.42 to 98.55. So 98.55 to 98.36. Once again, 98.55 to 98.36 is a very nice level to consider as well. Now, if you're new, you are tend to ask the question, which price point do you want me to take? If that's the question, that's meaning, do you want me to go long at 99.14 or do you want me to go long at 99.36? And what I would tell you is I don't know right now. These are two ideal price points that I'm just pointing out to you. That's what trade identification is. Trade execution is a whole different ballgame. So current price is 1.0149. My current date is November 23rd, 2011. These two are ideal price points to go long, depending at that point in time when it comes down what time of day it is. What's on the news event? Is news coming out in the next 15 minutes? If it is, I would not dare to get into a trade, and depending what kind of news is there. Depending what the Aussie CAD is doing at that point in time. Sorry, not Aussie CAD. Depending what Aussie USD is doing at that point in time. Is that also overstretched itself completely? I would love that. Has Aussie USD also hit a strong support resistance level and a fib level? I would love that. Is USD CAD stretched itself out the other way? Right? So on and so forth. So if all factors line up, I'm looking good, right? And the other factor, of course, is the news. How much negative news is out there? If I'm trading in the morning, what news was announced overnight when I was sleeping? What is the significance of that news that was announced overnight in the context of the overall bad or good news that's out there? Was that just noise? If it's just noise, is that noise in my favor? See what I'm trying to say? It's just like the retracement. If you're looking at a monthly chart, right? Let's say the trend is long, whichever pair as an example. Let's say the trend is long, and overnight it retraces, it goes short, i.e. retraces. Now, first thing I want to figure out is why did it retrace, based on what news event or what happened here. And once I figure out that the what factor, the why factor, was just a noise and a general retracement, people are looking to trade, great, I'll take that pair. If it's at a support resistance level or a fib level and stretches itself out. So you need to know these things, folks, because that's what risk management is. If you're not aware of things like such, you're not managing your risk properly. You're at a higher risk relative to somebody who understands these factors and can take a proper trade. Okay, I said a lot of things, so let's get back on the, how am I going so far, folks? You finding this helpful? Can I have a quick yes, no, maybe, so I can understand? Are you guys enjoying what you're hearing so far? Is this what you want to learn? Anybody on the chat? Can you give me a quick yes, no, maybe on the chat? Is this what you enjoy hearing? Is this what you want to learn? Okay, I got one yes. Okay, I got two yes. Okay, I'll go with two for now. Okay, I'm getting a few yeses. That's good to know, guys. I need to know I need to understand. I want to make sure that you guys I'm making most of your time and my time. So that's why I will pause once in a while and ask you guys to let me know. So that's good to know. I'm seeing a lot of yeses, right? And if you don't find this helpful, feel free. I won't take offense. Okay, let me keep going then. All right. The next fib I'd like to know, guys, and it'll be amazing if some of the 61.8% or so tie. That's where the bulb starts going off. Okay? Let's go. Whoa. Let's see what this one is. I would keep this in green as well, and I appreciate there comes a point where I also start going a little bit crazy, but I try and differentiate it a little bit. So you'll notice I didn't make it as thick as before, but it's still green. Because trust me, when you go down to 60-minute or try and take the trade from an execution point of view, these lines, okay, awesome. Now let me make sure my lines are correct. So what's the low here? 85.73, 85.76, 85.76, 85.76, 85.76, and the high I already know from there, 66.37, 66.37. Do you see what I said earlier? I said there's no need for me to draw a resistance line there because, see these levels? I automatically select, and once you do, you can go and set it as default. I always select my 0%, like 0.00, and 1.0, which is 100% of the move. So that automatically draws that support resistance line for me. You see what I'm saying? But for instance, if I'm not using this high as a fib level, I would draw a black line, and again, I keep going back and forth. Whatever makes sense for you guys. All right. So the thing to note here is on this move, which started from see my date down there. I hope you guys can see my date down there. It started from June 2010 all the way up to my current, whatever, October 2011. 38.2% is 98.82, if I can read that clearly. Let me expand that a little bit. Yeah, there you can see. And that's what I do all the time, kind of expand a little bit and read. 98.66, not 88. 98.66, okay? So, check this out. 98.66, once again, 98.50, I believe, was somewhere here, 55. 98.36. So you see, guys, what I'm doing? I'm coming down to a range of 25, 25, 20, 25, 30 pips. That's where I want to execute a precise trade. I'm not looking at flipping a coin here. Okay, I'm not guessing here. This is thorough analysis, and this is a piece of what I do. But I'm waiting. This is what positional traders. This is what positional trading is. You identify a trade, you wait for it. Now, there are times where it just won't come your way. I can't force the market to come my way exactly. But if you're patient and if you wait for that right trade, your risk-reward ratio would be very nice. Okay, let's keep moving on. The other nice one that I'd like to consider is probably the more recent one, this low there, which I can see also it's like a little 50%. That's fine. 96.05. Look at 96.05. 96.05, 96.05, 96.05, 96.05, and the high there was 66, 37. Okay, at this point, I see this is a 76. I will start using a little different color so it doesn't completely drive me crazy. I'll use a blue. Notice I use the same color. You'll notice for the trend line, which is this line, and the levels as well, so that I can see them respectively, right? And don't let this blue line confuse you. By the way, my fibs generally are like in dashed or dotted line. My support resistance lines are straight. Again, I came up with these things on my own. Feel free to amend as suitable for your own visuals. Just some suggestions what to do. Okay, now down here I can see once again a very nice, 76.4%. I don't know how clearly you can see that, but 76.4% starts tying up at 98.55 actually. 76 is a very strong level beyond which it's almost like it wants to retrace or break the trend or whatnot. Okay, enough of Aussie US. I'm almost convinced, and I can do always more and keep going back and forth and whatnot. But on the Aussie CAD, since the trend I see overall is long, there's an alarm that almost goes off in my mind. Alert, alert. Generally speaking, there's a risk off environment because of what's happening in Europe. When there's risk off, and I'm repeating myself, when there's risk off, typically your Euro, your Aussie, your Kiwi should be going short, right? And that's what it's doing right now as we speak. That red candle, that huge red, is a monthly candle. It's going short. It's kind of going sideways though. Two reds and one green and then short. And there's always some positive news that comes out. That's the other thing, guys. No matter how dark, unless the world falls apart, and that pretty much happened when the subprime happened back in 2008. But more times than not, if you have 5, 6, 10, 1 month of solid bad news, there is a glimmer of good news out there. People start, praying, almost hanging on to some good news out there. Number one. Number two, this is very important for you to understand. So I'll say it slowly. Major institutional traders, whether it's banks or hedge funds or macro funds or the George Soros or the Citibanks or the China investment agency, the sovereign wealth funds, the Saudi wealth funds, the oil funds, everyone wants to book a profit, okay, on the financials, on the financial statements. in this example, if someone was going short Aussie CAD or definitely going short the Aussie USD, and I'm not get too much time to, I just got 10 minutes left to go over Aussie USD and USD CAD. But if in this example, let's say they were going institutional traders, major players, what I refer to as tier one, those who control 80 or 90% of the market, if they are going short on this, most of them, they have to book some profits for the shareholders, for their owners. And the way you book profits is that you have to close certain trades. Back to what I said, trade management, same thing. They have to close certain profits to book realized gains. They have to realize certain gains, because just because the trade is running and you're making billions of dollars on it, if it's open, as far as memory serves me, and as far as I understand accounting, and I'm an accountant by profession, you cannot book unrealized gains on your profit and loss. You cannot distribute dividends to your shareholders based on any unrealized gains for open trades, essentially. So you have to close some trades. When they close trades, those major funds, guess what happens? In capital letters, retracements, it goes the other way, right? So if they were selling and they close, it's like a buy order, it goes the other way. That's what you're looking for. So back to my point. When I said some people are looking for good news, a sliver of good news, whether it's Merkel speaking out or the new Mario Draghi speaking out or QE3 for that matter. There are times when people are looking for almost any excuse to close their trade, right? Going the other way. So when you see such things and you see huge spikes, that's what's happening in the markets, folks. I mean, that's one of the reasons that's what's happening. So back to a question I asked myself earlier from a student's point of view was that at this point, I just explained to you two decent price points, 99.14 for a bunch of reasons here, and 98.55 to 36 level. So you can ask me as a student, where do I go? Which price point would you like me to take long? And my honest answer to you would be, it depends at the point in time when it's sitting right on top of that number. What kind of news is out there? How much has it moved for the day, for the week, for the month? Has anything else changed in the market that I need to be aware of? And the two very important, and at this point I think I'll open up my snapshots rather than try and do a whole chart for you. And this is the beauty, guys. If I haven't said this enough, please. This is why I like. This is one of the main reasons why I like FXCM. You can open up a snapshot. Okay, when you save this chart. In fact, let me do that. Let me show you. There's a new chart that I just did in front of you, right? You can go snapshots, save snapshot, and I'm sure you have this feature on other platform. All the other platforms do almost, but I just like them. And hang on, let me go back so I don't screw up here. You go File, Snapshots, Save Snapshots, and I'll type Aussie CAD, but I'll be careful to say November 23rd FX Street class, because it will otherwise overwrite my Aussie CAD. It's just like a Word or an Excel document. If you use the same name, it will overwrite, and I don't want to do that. Okay, so, and I save that, right? And you can almost close this. And if I go back to my snapshots, open snapshots, you will see right there. See that Aussie CAD? In fact, let me open up my Aussie CAD now. The one that's already there. When I open up my Aussie CAD, do you see all the lines there? That's how I have my chart. And I do appreciate a lot of you might find it confusing initially, but you know what? Your eyes are getting used to it. It saves me a lot of time. I don't have to repeat the whole process again. And that's pretty much what I also have. In fact, I need to update my charts. I didn't pick up this low there right now, what I did, you guys. 9605 to that top, so I didn't pick that one up. Okay, let me go back on the one that I just saved in class. Once again, snapshot, open snapshot, Aussie CAD, November 23rd FX Street. This is the one I just saved. Now let me go on my Aussie USD. Now, the one thing I would immediately caution you, this is nice by the way, it's just at the level, is when you open snapshots, it saves the snapshot based on the last time you did it. So let's say if I open up the Aussie USD chart, let's say a week before, a month before, or 10 months before, and I'd say the 10, the time frame would be back from 10. So the only thing you need to do is quickly go back on your up top on your time frame and choose any time frame. I don't care, 1 minute chart or 1 hour chart. It just picks up the current time frames, and then you can go back to what you want to see, daily, monthly, whatever, right? So yeah, in my case, I of course look at Aussie very regularly. Let me go on the month and show you something on the Aussie USD. See how nicely this is tied up. Once again, use this parameters. What's happening here? Okay, so again, too many lines. It takes a little bit to load up. Can you see? I know there's too many lines. You know what? I'll remove some lines so it's not too confusing for you. I won't save it then. Okay, that should be a little bit better. Do you see this is a monthly chart, guys? Let me size it properly. Okay, that should be better. This is a monthly chart, and if I do this, you should be able to see both of them simultaneously. So Aussie CAD and Aussie USD. Okay, so when Aussie USD goes down or short, my Aussie CAD, and if my Aussie CAD is going down too, it's one of the factors, of course, is the Aussie. The other factor, by the way, is the US CAD, the CAD piece of it. Now, it just happens that on the US CAD, CAD is to the right, okay? And on the Aussie CAD, CAD is to the right as well. So guess what? If the Aussie CAD and the US CAD both were to go short, you would make tons of pips on the Aussie CAD because they're both parallel pairs to Aussie CAD, not inverse. Okay. Okay, so let me get back on the subject. Currently on the Aussie CAD, my price is 138, and I know I said under 3 minutes, so I'll try and wind it up. What I'm looking at 99.14 and 98.55 around that level to consider going long, subject to what kind of news is out there and everything else was before. If you look at the Aussie, it's at 97.209. Look at this. You see this low on a month. Let's look at a monthly chart. Let me expand this before I. So this low is 93.86. This low, I think, also ties very nicely with. It's taking a little bit longer for me to load it up here. I don't know why. Okay. Yeah, sorry. There it is. This is a monthly chart once again. Do you see how it came back up this high? 98.04. And not this. So this is 98.04, right? I'm sorry. I'm not saying the numbers correctly. I apologize. 94.05. 94.05. Once again, 94.05, October 31st, 2009. And this low here is 93.86. So, about 20 pips or so, 15, 20 pips or so. The point here is, once and if this comes back paired 97.23, comes down to under 300 pips or so, couple of things will happen. It's going to bottom out. It's going to do double bottoms with the September low. It's going to try and previous resistance now turn support, right? Position, and I don't see any fibs lining up unless I missed something here, but I don't see any specific fibs lining up. But nonetheless, these two events are significant, right? Just that, and depending on what's happening on the USD CAD, your Aussie CAD around that point, if the Aussie USD starts jumping up, right? Some positive thing comes out or whatnot. You can definitely expect to see a pickup, a rally on the Aussie CAD as well, around those levels, 99.14, 98.42. All right, I'm almost out of time. At 7:45, my 45 minutes are up. I'll take any questions now. Let me know how you found this. I'll put up my chat box. Let me know. We have 5 minutes or a few minutes, I guess. Right, Mount? We have a few minutes. Oh, thanks, Deme. So Deme says she handled all the questions. I wouldn't mind some feedback. What do you think? Or any questions? Okay. Charles says how to get Thinkorswim set up. Charles, my apologies. I'm just completely caught up. As I said earlier, and since you asked the question, I will try my best. If you go on 1000 Pip Club, the free training site, and guys, just go on the free training site. If you try and log into the this is a paid membership. You won't have access because somebody asked us, we're not getting access and whatnot. You're trying to go on the pro class site. That's a paid membership. So go on free training. There's enough good material here for you to get started. As you go through basic trade plan one, this keeps popping in my face. Trade plan whatnot. What I'll do over the weekend, I'm dependent on my website person. He's a little busy too. There's a little class that we did on a paid site where I showed them how to use Thinkorswim and how to set up. I call that ATR. ATR is not really a proper term. It stands for average true range. Take that as ADR, average daily range or average range. It's average range, just simple average of 15 days or 15 weeks or 15 months. But I show them how to use the formulas, which by the way is thanks to one of our students in class, in our paid class, Janice Hensley. She was kind enough to type out those formulas and share with us, so I've kind of shared it with the class there, and I shared it with you guys. Once again, do not trade just because average daily range is stretched out. I don't care how much is stretched out. There are times you'll see it can be stretched out 2 or 3 times. It just gives you a little heads up. That's all it does. It just gives you a little heads up. Hey, by the way, you should be looking at this one today or tomorrow or whatnot because it seems to be stretched out. That's one of the indicators. Okay. Okay. Any other questions? Or any other comments, thoughts? How much do you need to trade this monthly chart? That's a good question. It's not just about trading the monthly chart. Let me just make sure that I guess I'll go off my way. It's not about just trading the monthly charts. When I want to take a trade, I go down to, of course, my daily and my 60-minute, even my 5-minute, right? And Jeff would tell you he'll even go down to 1 minute, and I do at times too. But on the monthly chart or the weekly or daily, the bigger time frames that I refer to, you can pick up some good trades. So to your question, how much do you need to trade this monthly chart? Always, every single day. I've got 28 pairs to trade from. I don't have just Aussie CAD. Look at this. Look at the setup. If you count 1, 2, 3, 4, 5, these are my 28 pairs. I have 28 pairs to trade from. I don't always trade every single pair. I don't even have time every single day to look at monthly, weekly, and dailies across these 28 pairs. But I definitely know most of the times daily what's going on across all the 7 majors and the yens and some of the exotics, Euro Pound, Euro Swissy, so on and so forth. So yeah. Can we, Abel, I would not like to pick up gold USD because that's not part of our syllabus. So you can do the same principle, and if you insist, I can pick it up and I'll drop a few. I'll show you how easy it is. I mean, it's the same principle. Just pick up a chart, start from monthly. Is it only Fibonacci that you use to enter? No, that's not what I said. Glad you asked the question, Mike J. I'm glad you asked the question. Please do so. But no, I don't use Fibonacci to get in. Just Fibonacci to get into trade. As I said, I use support resistance, fibs. I see if the pair is stretched out, how much is stretched out. Understand the charts, the directions. That's all the technical piece, right? Parallel inverse. I would not get into Aussie. I'll repeat. I would not get into Aussie CAD without having any clue of what's happening on the Aussie USD or USD CAD. And when I say any clue, I mean the support resistance levels, the Fibonacci levels, the price charts on the Aussie USD and the USD CAD along with Aussie CAD. If I was to get into Aussie CAD. I hope that answers the question, Mike J. Okay, this was a free platform. Is that yep, it's a free platform. So you can set up demo platform on FXCM. And they don't even bug you to open up a live account. So Guys, I hope you really enjoyed this session. And we look forward to having. So the trick here, guys, is I didn't expect anybody to come up with a trade plan right away, but I'll give it another few weeks. I do appreciate it's not as easy, especially if you're new, just to write up a trade plan and post it just before class. But that is the kind of effort I'm looking for you guys to make most of the class. That's why we thought we'd put up this class for you. This is your opportunity, folks. If you are looking to learn Forex hands-on, this is your opportunity. Make most of it. Okay. What are your best technical tools before you go? That's what I've explained in the 5 classes, Mike J. Support resistance, Fibonacci, ATR, just to get a sense of what the pair is. Parallel inverse. Do I use MACD? No. Do I use Bollinger Bands? No. I can't even pronounce them right, leave alone. That's it. But the point here, and I'll tell you why. You must have heard this from many, and I know you heard this from many other instructors. I mean, if you have a bunch of indicators out there, it'll confuse you. It's like a tool, folks. If you're a carpenter, you want to build a house, right? You need to know what kind of tools do you need to use to build a house. I mean, there are all kinds of tools you can go and pick up from a store, and you can almost kill yourself or hurt yourself badly if you don't know how to use the tool. That's what these tools are. If you use too many tools at the same time, again, you'll hurt yourself, whether you're trying to build a house, a table, or trade Forex. But here's what I'm suggesting. If you think that you can get away with using some of these tools on the technical side and have no clue of fundamentals, I'm here to tell you you're wrong. I'm here to tell you on a long-term basis, it won't work. Also, if you're trying to scalp, it's my opinion, and I stand to be corrected. Over a long-term basis, you'll burn yourself out. So it won't work on the long-term basis. Again, if you're scalping without any clue of what's happening on a monthly, weekly, daily charts, again, you'll make a lot of mistakes. So those of you who've been there, done that, can appreciate what I'm saying. Okay, folks, I'm done. Thanks again. Thanks, Dinesh, for being here. I appreciate. We'll see you next week, guys. Bye now.